Hello and welcome to Crypto Weeklies. In this video, we are analyzing Dogecoin and its token Doge. None of the content is financial advice. You can see all of the content on cryptoweeklies.com, linking on the bottom of your screen. The content is available for free. You don't have to pay or sign up for anything. So let's get started. Over the last couple of weeks or so, the market has been trending down. Doge has crashed by about 10% over the last 7 days, and by about 25% over the last 30 days. Market cap still above 25 billion. By market cap, it's ranked number 8th. Again, some distance between 7th and the 8th spot. 7th number has about 60 billion market cap. Doge has less than half of that at around 25 billion. So a clear contrast between the top 7 and the rest of the cryptos. Doge has been around for quite a while. It was a fork of Litecoin created sometime early 2014. Again, you can check over here. um, it's the one of the original meme coins. It's a light-hearted fun based cryptocurrency. Again, has been around for quite a while. Has three major, you can see, bull market. One in 2014 when the price was 0.001 cent. Now it's at around 17 cents. Cooled off for 3 years from 2014 to 2017, then had a major run in 2018, cooled off till 2020, had a major run in 2021, and now potentially after 3 years of sideways action in starting late 2024, price grew from 10 cents to at one point at around 30 to 40 cents. Again, has not reached the previous all-time high at around 62 cents. Again, over here you can see the weekly average price back in May 2021 was at around 58 cents. This time around in December 2024, the price did go as high as about 43 cents. But you can see that since June 2022, there has been a creation of several higher lows on Doge. If this trend were to continue, the machine learning based price forecast says over the next 6 months the price, again in the base case scenario, could be between 15 cents and about 20 cents. That means that's the direction of the price forecasted. It's more related to if the price has more likelihood of going up with time or down with time. In terms of the yellow line, which is the one standard deviation bull case, 68 percentile bull case, price action only having only 32. If you divide it by 2, that is about 16% chance of going higher than this yellow line. That is between 18 cents price action till about 50 cents. That's the non-euphoria bull case for Doge. If we account for the euphoria, that is at 95 percentile confidence level, the price with only 5, that is 2.5% going higher, has about price forecasted between 20 cents to about a dollar 16 for Doge. So that's the two standard deviation. So the reality in if there is a continued bull run, taking consideration the three peaks since 2023 December, first at peaking at around 10 cents, then second at 20 cents, and third at around 45 cents. The next peak at around again could be a midpoint between this 50 cent level and dollars 15, somewhere close to that. If you take an average of that at around a dollar, if you add them up and take an average, that could be somewhere between 80 to 85 cents for Doge. If the prices were to go to the midpoint of one standard deviation and two standard deviation bull case. The bear case for Doge per the model in the next 6 months is between 7 cents and about 13 cents. So the purpose of this model is not to tell if the prices have to go up or down with time. That is determined by the market forces, but more so if identifying the directionality, which is more likely using historical data as identified by this pink line, and then identifying what could be a magnitude using standard deviation techniques and probability theories. If you want those predictions available in the machine, instead of a graphical view in a tabular format, they're also available on the bottom of your screen. This pink line is this base case in the column in middle. To its left are the three bear cases at 1, 2 and 3 standard deviation confidence level, and similarly to the right are the 3 standard deviation bull cases. You can check how this forecast was calculated using the description. If you enjoy this kind of content, please give us a like and subscribe. It took about thousands of hours to create these models for not just Doge, for most of the top 100 cryptos by market cap on their USD pair as well as on their ETH and Bitcoin pair as well. if you're interested in those kind of pair based analysis. You can see Doge versus BTC graph over here. You can see it's kind of all over the place. Is not that actively traded with respect to that pair. If you look at Doge versus ETH pair, you can see a series of higher highs um, and higher lows. So that means in terms of how Doge is doing with respect to ETH, the price of Doge with respect to ETH is increasing. That means Doge is outperforming ETH with respect to that metric, whereas with respect to Bitcoin metric, if you look and try to ignore some of the noise in this chart, you can see that price of Doge divided by Bitcoin is going down. That means Bitcoin is outperforming Doge. So again, we have to fix this chart. Again, this chart gets updated every um, single days or so. It takes into consideration new data, trains the model on the updated version of the data to also analyze again. So this is not Doge, this is ADA. If we go and analyze the risk color coded with respect to the 20-week moving average, per this model the risk levels have cooled off less than 10%. Now this model did identify the 2021 peak but not the 2024 peak. At that point in time, the risk levels were only 47%. If the risk level were to go between 40 and 50% per this model, the price for Doge at that point in time could be between 54 cents and about 60 cents. So that is one price target for this model. Similarly, the regression based fair value for Doge comes at around right now at around 34 cents. That means per this pink line, which is the fair value analysis, again accumulating below the fair value again for relevant cryptos. Again, one Doge being one of them, having been in the top 10 for quite a while, accumulating below the pink line. And if you want to be more conservative, accumulating below the green line, which is the one standard deviation residual applied to the to the fair value to the downside. Again, historically speaking, that has been a great buy zone for Doge. This time around, the prices did not go below the green line, which is the one standard deviation residual bottom. Right now that level is coming in at around 14 to close to that 15 cent level. So if the prices were to crash some in the next few weeks, and this function has a upward bias now, the green line, that is back in 2024 the green line was at less than 5 cents. Now it's almost close to 15 cents, so has grown by about 3x. So if this particular price action goes below the green line, that could signal a buy zone per this model. Again, not financial advice. If the prices were to go to the other side, covering that 68 percentile, again I will get rid of the pink line to identify. Again, price stays about 68% within the yellow line and the green line, the higher end of the forecast. Again, you can see that twice in, that is once in March of 2024, second time in December 2024, this yellow line acted as a resistance. That means the euphoria case, which usually pans out after the yellow line has been meaningfully broken, and the price rallies, that resistance that gets meaningfully broken and the price rallies beyond the yellow line. That's when the euphoria case kind of kickstarts. Historically speaking, right now that level is at around 80 cents. The past two attempts, the price did fail going beyond the yellow line. If it at any point goes below the beyond the yellow line, the next level to watch is at around the two standard deviation regression support, coming in at around $1.88. Again, the reality could be somewhere of a diminished return, somewhere between the midpoint between the 80 cents and $1.88 per this model. If you were to be more conservative, that again $2.60 divided by 2 at around $1.30. That is one of the target for Doge per this interpretation of this model. Again, the tokenomics for Doge has left a lot to desire. The circulating supply and total supply are coming in at around 150 billion. So unless the market cap reaches that 150 billion target, then the price have a lot to a tall order to go at around close to $1. Again, it would take a lot of market cap movement to get to that point. Again, that is something that I wanted to highlight as well. In terms of the time weighted average price analysis for Doge, again this model did identify good times to buy in the bear market, again when the price was close to or slightly below the blue line, which is the identification of the time weighted average price. That level right now is coming in at around 8 and 8.3 cents. So if in the bear market the price go below that level, that could signal in the a buy zone in the bear market accumulation. Right now the risk associated is at around 50%. So if we take a confluence of all the model and come up with an estimated bull run target for Doge, again this might be an outlandish number at around 97 cents. Again that is assuming all the three models go to that highest risk at around weighted risk at about 100%. Right now it's at around 17%, so less than 1/5, close to that 1/6 risk and 5/6 reward. If we estimate that instead of price going to 100% risk level, if the risks top at around somewhere between 60 and 80%, the price of Doge could be somewhere between 60 cents and 80 cents. Again, as the estimated bull run case at 100% risk is at around close to $1, 60% would be at around 60 cents. That would represent about 3.5x reward from the current price, and 80 cent Doge would represent between 3.5 and 4.5x from the current price. So with that I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.